Welcome back. Now we turn our focus to the earnings arena. Higher volumes and average selling prices were among key drivers of WeBuyCars' growth in core headline earnings. SA's largest second-hand car retailer reported monthly sales volumes exceeded 15,000 units in six of the last 12 months, signs of continued gains of market share despite structural shifts in the local automotive market. Company CFO Chris Rein joins us now with greater insight on that performance. Chris, thanks so much for your time today. Let's start off with the state of the used car market. How has the surge in affordable Chinese brands on the new car sales side changed demand dynamics in the used vehicles market?
Yes, good afternoon, Ntawaleng, and good afternoon to your listeners. We have seen some structural shifts, as you said, in the market. We like it when new vehicle volumes are growing, because most often someone has a motor vehicle to trade in. And we also like it when the motor vehicle park is growing, because that creates future opportunities for WeBuyCars, and we like to participate in the downstream activity relating there too. You have mentioned the 17 new OEMs that entered the South African market in the last 6 or 8 months. And those have certainly put some price pressure on some of the price brackets against which we participate and compete against, particularly in the probably 300 to 500,000 Rand price bracket.
And let's talk about that even further, right? You cut selling prices in the second half of the financial year to stay competitive. How much pressure did that put on margins?
So we definitely saw some margin pressure. We took a deliberate decision to liquidate some of the inventory that competed against those vehicles, and that places us well going forward. We also have realigned our sort of lead prioritization on the buying side. Going forward, we'll be probably competing in the next 6 months in the more affordable segment at price points sort of ranging from 120 to 200,000 Rand in terms of our volume play.
And keeping in mind what you said, are you saying that the margin pressure that you were experiencing is temporary? I mean, you've also touched on the fact that when there are new vehicles in the market, they tend to also filter through into the used vehicle market.
Yes, so we're excited about new vehicle volumes being up 22% year on year. And that's definitely an opportunity for WeBuyCars as soon as those vehicles become 1, 2, 3, 4, and 5-year-olds.
Now, you know, your volumes and your footprint keep growing. Chris, 179,000 cars sold, 18 supermarkets, and 106 parts. Taking that all into account, where does your market share stand at the moment, and what's the next leg of growth?
Good question. So we think it's always difficult in the used vehicle market to understand the denominator when calculating market share. But if we use used vehicle registrations and basically the information we get from the RTMC or from eNatus every month, at the end of September 25, we're sitting at 10.3% market share using used vehicle registrations as the denominator. And with the sort of new supermarkets that we're planning on opening late in November and December, we think we can continue on that growth trajectory. And we're hoping to have just north of a 13% market share by September 2026.
Now let's talk financing for a bit. We did see interest rates coming down over the past 12 months. Has that translated into, I guess, appetite when it comes to lenders opening their taps?
We did more finance deals in the financial year, in the most recent financial year, but as a percentage of our total volume, our finance channel dropped from 18.8% to 18.4%. We have seen some pressure on the finance channel, and we've actually, in our portfolio of banks that we work with, we've actually seen a slight tightening in credit approvals, in credit granting and credit approvals. But it could also be related to the Chinese and Asian brands that we mentioned before. And you could have a consumer putting a credit app in with us, but also putting in, you know, at multiple other dealerships and other locations.
So a lot of dynamics to consider on that front. Now, Chris, you've also shifted towards more affordable, fast-moving stock, right? Is that long-term strategic shift? Is it a long-term strategic shift or more of a tactical response to this specific cycle?
I think a tactical response to where we saw ourselves in H2 of this financial year. We will continue, with our technology stack and our agile, nimble technology sets. We will continue to monitor where we are and position ourselves for the best possible sort of opportunity to serve our consumers.
And let's talk CapEx. Where are you pouring money into when it comes to investments over the next 6 to 12 months?
So we spoke at the half year about a 600 million rand investment in land and buildings. The majority of that has taken place, with Lansdowne and Montana to open in November and December. With that comes also the need to stock up from an inventory perspective. And we also spoke about a 600 million rand spend there. Some of that inventory we have already in anticipation of the openings in November and December. And some of it we're buying during the months of October and November 25.
Chris, let's leave it there. Thanks so much for your time and taking us through the year that was for WeBuyCars. Now, that was Chris Rein, CFO of WeBuyCars.